Hello, welcome everyone. It's been a while since we've put these out. We've had a lot of things happen over here at Person's Planet, and many of you are clients do know about the Algo 17 Extreme. We've had our 3-day seminar, which was a phenomenal success, and we had a lot of people come into the office week before, week after, and now here we are in the final weeks of the year with the stock market that's turned negative on the year. Our Algo Optimizer in this environment, a couple things that we've had happen to a lot of traders that we've been training is that you cannot build and look for trade back tests results in an environment that has not ever happened before. And generally speaking, I'm talking about how many times have we been in an over accelerated 60 plus point ATR based on a 10-day range environment, 10-day ATR that is. When the average 5-year or 3-year, the average 3 years around 24.67 points on a day-to-day basis, that's the average. So now you're almost 2.5 times standard deviation or 2.5 times the expanded ranges. You can't go back and back test for the small time frames and find a suitable trading system. So one thing that we have to do is reduce our holding period. So instead of looking at 60-minute or 15-minute, you have to reduce your holding period or increase your risk tolerance. So this is a 5-minute system. And so if you think about it, if you have a short system that generates at 25.80 more or less area and has a 15-point range, that's $750 risk per contract. Most traders were using a 15-minute trade system, not a 5-minute, 15-minute trade system for a 3-point move, which is $150. So look, $150 on a 15-minute system or 15-minute time frame chart. $150 was what we could use, but now you're 5 minutes at $750. There's where we need extra filtering mechanism in the marketplace, because that's something I don't think a lot of traders have been able to grasp. And so many times you might get with some false signals, and we had a nice little sell signal this morning on the system, and then it went long, got knocked out, then it went short, it got knocked out, it went long, it got out at the profit target, it was long, and then trailed the stop and got out. That's just so far what we saw this morning between 9 and 10:30. So not great. Then what we were looking at was, because the market today was it started to see a defined uptrend. The system actually had this little buy signal here right before noontime. And what happened? The profit target never happened, but what it did was what it's supposed to do, which is, I think a lot of traders struggle with this idea of get out when things don't turn right. And then more importantly, what are you supposed to do when things start to go wrong or when you have reverse signals? Go short. And here is a classic example of a system that goes long, gets out, reverses, and goes short. And how does that all work out? Well, whether or not you take the long or you take the short, or you use this as an indicator or a guide, the fact is, when it gets out of, or at least in this optimized program, which is what we've developed for our traders at our mentoring system sessions, is that it gets out at partial position. You can see here, short 2 out of 1, and it trails the stop on the balance. So when the market is, let's say you're using this as a guide rather than actual trades, that's fine. So then you're thinking, oh, it's hitting the low, I should get out. Then you can use the system and say, is it still short? If a system's still short, you probably don't want to be looking for buying opportunities. Now, we have a couple indicators down here. One is the on balance volume tool, and you can see that the OBV, which is in blue, crossed below a moving average. And as you can see, we are trending lower. Now, this is our person volume indicator. And ironically, as the market was breaking out to the upside, the volume was divergent. It made a lower number 2 point than a number 1. So maybe, in essence, traders could use that as a good catalyst or filtering mechanism to say, should I be buying that breakout or is it a double top? But in any event, let's take a look at the way this market is traded all the way down. What it has done as it gets out of half the position at the intended profit target. So this is the short. This is the initial stop level. Now this orange is a new trailing stop, and that is the profit target. So no matter what happened, if it got out of the profit and it bounced up, it would have gotten out of the other half of the position. What happened now? A new stop was initiated. That's this orange line. And all of a sudden, we start to see the market continuously melt down. What's the volume action looking like? It's negative. It's still trending down. Our analysis, the person volume indicator, melting down. Well, finally, it gets out of the trade at the bottom here of the, I wouldn't say today's overall daily range, but it did execute at the end of a couple conditions. So that's where it gets out of the trade. I mean, if you're now saying, well, then now I'm going to look for some buy signals, what are you going to look for? Well, maybe the system goes long if you're looking to go long on a negative downtrend day, and that's nothing wrong with that if you have the right criteria. So what would be the right criteria? If volume starts to trend up, number one, if we start to break out and close greater than a last conditional change, which is those gray lines. That's what those gray lines represent. It's the last, what we call LCC, last conditional change. I wrote about the last conditional change and created this, identified this as a trading methodology back in my book that was written in 2005 called Candlestick and Pivot Point Trading Triggers. It's a very efficient trading technique that we teach to our students. The funny thing is, as it is right now, the system actually said no longs, and you'll see exactly where's one criteria. Why did this get out? Because the maximum bars, the average length of holding period exceeded its holding period, and it took an incredible trade on the downside here. Now, it went short again and got stopped out. And at this point in time in the day, all systems are off. It doesn't take any more trades for the day. And that's the overall day session movement. So this is the Algo Optimizer. These are the results. And as you can see, great way of having a tool that says, how do I trade in this environment? I can't make up, and many trading system designers, the problem is they design a system for past market environments. And then when market environments change, specifically how many points does the market go up and down in a day? When the time of day, the heavy volume. We know that there's decent volume at the beginning of the day. And nowadays we know that at around 12 o'clock in that time frame, we see a lot of conferences that take place in the White House, a lot of press meetings happen at around 12, because a lot of strange things happen at 12 noon. So we get that 12 noon type of movement. And then at the end of the day, we also get those types of market activities. So from an algorithm standpoint, I think that the only thing that you can really do to combat that issue of when to expect moves and when the volatility expands or contracts is to trail your stop function, and also to reduce the time frame of your trading system, because as I just indicated, it is very difficult to develop a system with a very small risk that many traders are accustomed to, especially retail traders. Now we have to be a little bit more thoughtful in our filtering process for trades. And I think one of the main consideration is, again, if a trading system is short and you think the market may be bottoming out, if it's still short, you definitely don't want to be buying. So that is the message for the day, and how the person Algo Optimizer is still maintaining some pretty phenomenal trade setups and identification in this incredible market environment. I hope this served you well and at least gave you an insight as to what we need to do as far as traders for adjusting in this volatile period of time. Thanks for watching.